Wall Street closes mixed. The Dow Jones rallies for the 9th straight day, while Netflix and Tesla correct over 8% on disappointing earnings, pulling the Nasdaq sharply lower. Asian markets trade largely lower, while GIFT Nifty also indicates a negative open for the Indian market. Infosys delivers a steady and in-line first quarter, but sharply cuts its revenue growth guidance for FY24 to 1 to 3.5%. From the 4 to 7% earlier. The Infosys ADR falls over 8% overnight. HUL's first quarter numbers miss estimates even as it posts a bump up in gross margin. The management points to improvement in consumer sentiment but says that competitive intensity is set to increase. And a mixed bag is expected from Reliance Industries in the first quarter. Refining business is likely to be under pressure, while the consumer business could deliver a steady performance. Jio subscription addition is expected to remain solid. HDFC Life, Ultratech Cement and JSW Steel from the Nifty 50 will be reporting first quarter numbers in an earnings heavy day today. From the broader market, also watch for numbers from Vedanta, Hindustan Zinc and Ashok Leyland. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we come to the last trading session for the week. So there's clearly lots to track in terms of global cues. This is a very earnings heavy day as well, like we were pointing out. But first up, let's take a look at what's going on across the Asian markets, because we're definitely starting on the back foot here. What's clearly looking the worst this morning is the Taiwanese market. So that's down around 190 points, over 1% in terms of a cut for the Taiwan market. Seng is down around 30 points for the week. The Hong Kong market has seen a cut of around 2.5%. And for the rest of the Asian markets also, you're seeing some cuts at the open, but nothing too severe. So the Nikkei market is down around 0.3%. You have the Kospi trading with 0.25% in terms of a cut, and Straits also just around 0.2% lower. So definitely starting weak, but nothing too bad, barring perhaps the Taiwanese markets. Let's also bring the GIFT Nifty up for you, because it is indicating that after the run-up that we saw yesterday, we could see a pullback at the start. So we're indicating around 91 points lower is where the Nifty could open for today's trading session. So that's what's really going on across Asia. But let's also get you a check on the US market. Wall Street ended Thursday's trading session mixed. So we had the Dow surging over 100 points. This is actually notched its first 9-day rally since 2017. So the Dow continues to power on. The S&P 500 did end with some cuts. It was down around 30 points at the close, like you can see, while the Nasdaq was definitely the big underperformer. It finished the session with an over 2% cut. A lot of the earnings came through, and that is what was weighing on Nasdaq. But let's also bring you some important opinion. This comes in from David Zervos and Eddie Ardini. Listen in to what they had to say.
I certainly think they're hiking rates next week. And I'm fully on board with another rate hike. And if we get a couple of 0.2s on the next core PCs and CPI, we'll get them in CPI. If we get them in CPI before the September meeting, I think they could pause for sure. If we get 0.3s on either one of them or above, I think they'll probably go again. But I guess I just throw it out there as, hey, if inflation doesn't come down as fast as they're thinking, if we're not getting down to 3.9 to 3.6 on core PC by the end of the year, why not consider the asset sales instead of another hike in September or another set of hikes?
I'm not saying there aren't any risks. I think, I guess I'm in the same camp as the Goldman economists are. We're talking about 75% likelihood that we'll not have a recession and 25% risk of a recession. So we're not, I don't think that any of the recession forecasters, any of the no recession forecasters are predicting that it's not going to happen at all. My opinion is that the economy is going to do surprisingly well, and so will earnings.
All right, that's some important opinion coming in, but let's now talk about all of the cues that you should track as we get into this trading session. We have our research team here to prep you up for this session. Ekta, Mangalam and Abhishek are all with us now with the trade setup. Guys, a very good morning to all of you. Ekta, let me come to you first. We saw that big rally in the last hour, ending just around 20 points away from that 20K mark. How's it looking this morning?
Thanks for that. Well, yes, we were in kissing distance of that 20,000 mark. The sensex broke above 67,500 in yesterday's trading session as well. Well, for today, we all know that the markets are going to react to that Infosys guidance cut. You did mention that the ADR was down around 8% overnight. We had HUL volumes which were lower than estimates as well. So a little bit tepid in terms of these two frontline numbers that the markets will probably take cues from. In terms of the global setup also, the US markets, it was a mixed session. Earnings continue to be in focus there. Asia is largely in the red at this point in time. So maybe the setup would be that we would probably take a little more time to get to 20,000. There could be some amount of profit booking, but we have really seen a rally in the second half of the trading session in the past couple of days, so do watch out for that. Now watch out for losses from HUL, Infosys probably being offset by banks as well as stock-specific gains in mid-caps. Remember that the Nifty bank gained over 500 points yesterday. Kotak ICICI Bank contributed the most. Mid and small cap indexes up 17% year to date. Other cues, we have Reliance, Ashok Leyland, Ultratech Cement, HDFC Life Insurance, Vedanta, which will be coming out with numbers today, so it will set the tone. Reliance will be post-markets, but the earnings will continue to be in focus as the top cues. And tomorrow we have an earnings-heavy day in terms of banks, so it seems as though Monday will be quite crucial in terms of how the markets would react to a whole host of earnings, such as Reliance as well as a whole host of banks.
All right, Ekta, thanks a lot for taking us through all of those cues. Let's also talk about some of these individual names in greater detail that Ekta was mentioning. Abhishek is here with all of the stocks that are likely to be in, in focus today. Abhishek, like Ekta was pointing out, a lot of the big earnings coming through.
Well, a lot of the big earnings coming through, and some of them have disappointed as well. So to begin with HUL, the revenue is below our poll of 15,148 crore versus our poll of 15,450 crore. Even the EBITDA is below our poll, and margin has come in at 23.2%. We were working with a margin of 23.6%. So there is pressure on profit as well, which has come in below our poll. Infosys, the revenue is higher than our poll, coming in at 37,933 crores. We were working with a number of 37,716 crore. However, net profit is below our poll, but the key part in the result was the revenue guidance, which has been cut down to 1% to 3.5% for FY24 versus earlier guidance of 4% to 7%. United Spirits X of SI's duty, the revenue has come in better than our poll, 2,172 crore of revenue versus our poll of 2,119 crore. Even the margin has come in better than our poll at 17.7%. We are working with a number of 13.8%. Coforge, the revenue and EBIT margin are way below our poll. EBIT margin is at 10.4% versus our poll of 13.4%. Even Persistent, the margin has disappointed. On the good side, Union Bank of India has reported a strong set of numbers. Return ratios are perhaps the best that you are seeing in last 8 years, aided by credit costs. Back to you.
All right, Abhishek, thanks a lot for taking us through all of those stocks. We are going to watch for all of these in today's trading session. Finally, it's over to Mangalam, who's looking at cues from the futures and options space. Mangalam, looks like the start will definitely be in the red, but take us through what we should track.
Well, the start will be in the red. Yesterday, we went within 10 points of 20,000, and looks like maybe, that date will 20,000 will be postponed. And there are three major reasons for that. One, poor results coming in from both Infosys as well as weak numbers from HUL. Secondly, we have big numbers post-market today, Reliance, and over the weekend as well, we have some of the big banks reporting their numbers, so maybe the street will take a pause. And overnight, we did see a big cut in the Nasdaq as well. Important to know that the FIs haven't let up on this market. In fact, they bought around 3,400 crores in the cash market. They bought almost 1,000 crores in index futures as well. But there are a few data points that suggest that the market was already overheated and in need of a bit of a cool-off. And that's because the FII long positions, the net longs, have crossed that 1 lakh mark. Apart from that, we saw the India VIX, despite the market surging, move near the 12 mark. And also the put-call ratio, despite it being weekly options expiry, has held above that 1.44 mark. Importantly, the Nifty July futures premium turned into a discount. So that was telling you that things were getting overheated and maybe there was consolidation on the cards. And the other big trigger was that the client positioning, which is the HNIs and some retail investors, were on the short side. So they usually get the near term right as well, 57% of their positions on the short side, whereas FIIs are 71% on the long side itself. Now, with the GIFT Nifty indicating a cut, let's see where the support comes in. As far as the options are concerned, 19,800 and 19,900 puts have both been active, both suggesting that the first important support zone for the market would be between 19,750 and 19,800 itself. In terms of individual stocks, let's watch out for Infosys. That will be the stock of the day. But the highest open interest at 1350 puts suggests that 1330 to 1350 would be an important support to watch out for the stock, even as it opens lower. And Polycab, that stock's been on a dream run, continues the run. yesterday entered the F&O ban and within one day is out of the ban as well.
All right, Mangalam, thanks for taking us through all of those cues from the futures and options space as well. With that, we are going to get into a short break. But when we, like we told you, it is all about earnings. Infosys and HUL will be reacting to their first quarter numbers, while big boy Reliance Industries will be posting its earnings post-market close today. So we're going to get you all of the details when we come back. Welcome back. You're still tuned into Power Breakfast. Now let's talk about the important earnings that came through. Tech giant Infosys' first quarter numbers met street expectations, but it was the guidance which really has, caused quite a shocker across the street. They cut their FY24 growth outlook very sharply, and this also led to the ADR falling over 8% overnight. So Rima is back with us to take us through the fine print, as well as, of course, what the management had to say on the guidance. Rima.
Thanks so much for that. As you pointed out, despite an inline steady first quarter, Infosys has gone ahead and sharply revised its top-line guidance. Earlier, they were anticipating that in FY24, revenue growth will be between 4 to 7%. But in just 3 months, that top-line guidance has been revised lower to 1 to 3.5%. So that's a very sharp cut that we've seen. That said, Q1 numbers are in line. The company's clocked in a constant currency revenue growth of 1%, slightly ahead of consensus expectations and better than what peers had reported. Remember, for HCL and Wipro, constant currency revenues had declined. For TCS, it was absolutely flat. In contrast, at least Infy has seen a top-line growth of 1%. Margins are down 20 basis points to 20.8% versus 21%. Deal wins have picked up. Current quarter, they're at $2.3 billion. In the prior quarter, deal wins were at $2.1 billion. So deal wins is steady. The company's attrition has further eased down to 17.3%, and the net headcount continues to moderate. We've seen that with peers as well, but even for Infy, the net headcount, has come down by nearly 6,900 employees. But I think what's disappointed the street the most is that India's second largest IT company is actually going to see very, very feeble and meager growth in FY24, just 1 to 3.5%.
All right, Rima, thanks a lot for taking us through all of those details on Infosys. Clearly, it's going to be the big stock to watch today, along with the entire IT pack as well. But the other company which posted results was HUL. Mangalam is back with us to take us through how the numbers look this time. Mangalam definitely looks like a miss coming through.
It was a miss coming in from Hindustan Unilever in their first quarter. In fact, those who were looking for some sort of solace coming in from management commentary wasn't there as well, because the management commentary was mixed too. At the same time, if you just take a look at the numbers across all parameters, it was a miss from the top line itself. The revenue grew about 6%. The street was working with a number of around 8.5% odd, and that revenue growth was lower because of volumes that grew just 3% versus a CNBC TV18 poll of 5 to 6% as well. Yes, the gross margins expanded more than what the street was anticipating, but the company plowed that back into spending more on advertisements and other expenses, as a result of which the margins and the net profit were lower as well. And the company said that going forward, they do see competitive intensity increase. So that is something that we'll have to watch out for. If you just take a look at the reported numbers, 15,148 crores on the top line. The street was working with a number closer to 15,500 crores, and that flew through to the bottom line in terms of a miss as well. In terms of the segments that did well for them, it was home care that grew in 10%, but weak performance coming in both beauty and personal care, as well as the food and refreshments business weighed down on the overall performance. And the management said in mass categories, there has been competitive intensity. Even as consumer sentiment has improved, rural still lags, and there is something we'll have to watch out for over the next couple of quarters. And to that extent, they will reinvest all their gross margin savings into ad spends. So EBITDA margins are not likely to expand further from here on as well. Brokerages have downgraded the stock.
All right, Mangalam, thanks a lot for taking us through all of those details. This is the other big stock to watch for. And finally, like we were telling you, big boy Reliance Industries will be reporting its first quarter numbers later today. This is post-market hours. So Sonia is here with us to take us through the key expectations from Reliance in Q1. Sonia.
Let me start with the stock performance first. Reliance Industries has had a great run up until now. In fact, the stock is sitting at a 52-week high and is up almost 30% from the lows that we saw in the month of March. But let me run you through the basic numbers and then I'll talk about the key businesses. It's expected to be a slightly muted quarter this time around for Reliance Industries. On the top line, we're expecting a marginal growth to about 2.18 lakh crores compared to 2.13 lakh crores last quarter. The pressure will seep into the operational front. So look at this, a 0.5% lower EBITDA is what we're looking at. The margins could come under a bit of pressure as well. And on the profitability front, we're expecting a 14% fall compared to what they've seen last quarter. So where does the pressure lie? Now, it's expected to be a mixed bag this time. While the refining segment has been under pressure globally and for Reliance Industries, the consumer businesses continue to be very steady. So let's talk about the refining business first. There is a dip in the refining margins this time around. In fact, Singapore gross refining margins have come in at $4 a barrel, which is a fall of 51% quarter on quarter because of the decline that we've seen in the cracks. Apart from that, if you look at the refining business, the dip in this segment will more than offset the higher petchem margins. And overall, in Q1, the gross refining margins for Reliance Industries are expected to fall 31% quarter on quarter. But let's move to the consumer businesses, which have been very steady, both Jio as well as retail. On Jio, the subscriber additions will be a healthy 25% higher than what we saw last quarter, coming in at 8 million subscribers. And even if you look at, the core business, there's a 15% year-on-year EBITDA growth that we're looking at, while the margins will be steady at 52.4%. Even the retail business has grown very well. So there's a 20% revenue growth, a 32% EBITDA growth in the retail business. That's largely because of an increased store footprint and better operating leverage. Now, there are a couple of things that the street will look forward to in the numbers this time. One of them is any developments on the new energy business. In fact, Goldman Sachs put out a report where they are valuing the new energy business at a base case at $29 billion. So any update on that will excite the street. Apart from that, all eyes will be on the AGM and details of the Jio Financial demerger.
Oh, absolutely. We're all waiting to hear by on that. Standard Reliance disclaimer on your screen. The channel that you're watching, CNBC TV18, is owned and operated by Reliance Industries. But with that, we do need to get into a quick break on the show. When we come back, we're going to shift focus from equities and talk all about the commodity markets. So stay tuned. Welcome back. We've gone through all of the equity market action. So let's now talk about what's going on with the commodities as well. Manisha is here with a quick update. Manisha, good morning. What are you tracking this morning?
Pavitra, thank you for that. I'm looking at the crude oil prices, which after getting stuck in the month of May and June between $72 to $78 a barrel, have seen that level breach in the month of July. We've seen higher highs coming in for this month. The markets will continue to watch out for what China does in sense of stimulus measures. The street is anticipating that we could hear something as early as this weekend ahead of the U.S. Fed meeting. That is on 26th of July. But the major gains for this week clearly come in for the natural gas prices, which has gained 6% overnight. Yet again, this is with Russia asking for removing sanctions from the fertilizer industry. If that happens, then the gas consumption from Russia could really surge on the higher side. The other commodity I'm looking at is the palm oil prices. That gained 4% overnight. It's trading at a 4-month highs after the Black Sea supply worries and also the Malaysian exports surging on the higher side. This is a commodity that could be looking at higher prices. So the edible oil prices, especially ahead of the Indian festival season, could be on a rise as well.
All right, Manisha, thanks a lot for getting us all of that action from the commodity space. That is very important to take note of as well. But with that, let's also bring you some updates on the record monsoon rains lashing large parts of the country. A landslide in Raigad district claimed at least 17 lives yesterday, and many more people are feared to be trapped under the debris. A red alert has also been issued in the district, and teams of the NDRF have arrived in the region to begin rescue operations. The search operation was called off at around 5 p.m. on Thursday, but it has commenced again this morning. Meanwhile, talking about Mumbai, there's no relief from the incessant rains. The IMD has issued an orange alert and a red alert for the areas of Thane, Pune, as well as Palghar. So that is important to take note of the weather situation across the country. But some more news coming in. Very early this morning, Jaipur was struck by 3 earthquakes, all within a span of just 30 minutes, causing panic-stricken people to rush out of their homes. The earthquake ranged from magnitudes of 3.1 to 4.4, and authorities are yet to discern whether there have been any casualties. But that is the news coming in from Jaipur very early this morning. On that note, we're going to wind down on this edition of Power Breakfast with the news that most Asian markets are in the red. Seng has moved into the green now, but we are definitely seeing a little bit of a cut come through in Asia. The GIFT Nifty also indicates a negative open for our own markets. But thanks for tuning into Power Breakfast. We have Bazaar Morning Call up into.